Alright, picture this. You're filling up your tank, and the price ticks past $6 a gallon. Your grocery store's shelves are half empty because shipping costs are through the roof, and your 401k just took a nosedive worse than a roller coaster. Drop sounds like a dystopian movie, right? But what if I told you this could be America's future? And it's all hanging on a single decision halfway across the world in the deserts of Saudi Arabia. Yeah, the oil kingdom that's been America's economic wingman for decades might be about to pull the rug out from under us, shifting its oil trade away from the US dollar in a move that could tank our economy faster than you can say gas hike. So strap in, folks, because we're about to unravel how this could happen, why it's brewing now, and what it means for you. Let's start with a question that'll make you lean in. What if the dollar, the almighty greenback you've got in your wallet, suddenly wasn't the king of the world anymore? It's a wild thought, but it's not sci-fi. It's tied to something called the petrodollar, a deal cooked up back in the 70s that's been the secret sauce behind America's global power. Here's the scene. It's 1974. The U.S. is reeling from the Arab oil embargo of '73. Gas lines snake around city blocks, prices are quadrupling, and inflation's chewing through savings like a buzzsaw. Nixon's out of office, and Henry Kissinger, the mastermind diplomat, jets off to Riyadh with a pitch. Saudi Arabia agrees to sell its oil only in US dollars and funnel the profits into American banks, and in exchange, the US promises military protection and a cozy alliance. It's a handshake that births the petrodollar system, and it's genius, because now every country needing oil, think Japan, Germany, India, has to stockpile dollars to buy it, making the greenback the world's reserve currency. By 1980, Saudi Arabia is pumping 10 million barrels a day, raking in cash, and the U.S. is riding high. Wall Street's swimming in Saudi oil money, and the dollar's untouchable. Fast forward to today, February 23, 2025. And that deal's looking shaky. Saudi Arabia's Crown Prince Mohammed bin Salman, or MBS as the insiders call him, is playing a different game. He's eyeing China, the world's biggest oil guzzler, and posts on X are buzzing with chatter like, petrodollar's toast if Saudi goes yuan. And they're not just hot air, because the numbers back it up. Saudi Arabia is cranking out 9 million barrels a day as of January 2025. PEC's latest, and while the U.S. grabs about 300,000 of those daily, down from 384,000 in 2024, China's slurping up 1.8 million barrels a day, nearly double what we take. Rewind a bit. China's been cozying up to Riyadh since Xi Jinping's 2020 visit, signing $30 billion in deals, and just last month, January 16, 2025, South China Morning Post reported Saudi Aramco's deepening ties with Chinese firms, building refineries to churn oil into plastics and chemicals for Asia, not America. So why's this happening now? It's a cocktail of geopolitics and ambition. Saudi Arabia is not the same kingdom it was in '74. MBS's Vision 2030, launched in 2016, is all about kicking the oil habit. Oil's still 40% of their GDP, for $147 billion in 2024 per the IMF, but they're sinking cash into tech, tourism, and a sci-fi city called Neom that's straight out of a Hollywood blockbuster. Problem is, oil funds it all. $71.40 a barrel this week per Bloomberg keeps their $27 billion deficit from ballooning, and they need $85 a barrel to balance the books, says the IMF's January 17th update. Enter Trump, back in the White House since January 20, 2025, pushing U.S. shale to flood the market, aiming to drop oil below $70, a move that'd gut Saudi profits. Reuters reported February 5 that Saudi Aramco jacked up March oil prices to Asia after Trump's tariff threats. 15% on imports, announced February 10, hit the wires. Riyadh's not happy, and ex-users are saying, Saudi's fed up with U.S. games. China's cash is king. Let's paint that 70s picture again, because it's the backbone of this story. Post-embargo, Saudi oil flowed like a river, and by 1985, when prices crashed to $35 a barrel, They cut output to the point for million barrels a day. But the petrodollar held firm. Why? Because everyone needed dollars for oil. Iraq tried euros in 2000 boom. US invaded in 03. Libya pushed gold in 2011 Gaddafi's gone by year's end. Saudi saw the pattern and stuck with dollars until now. Because the world's flipping BRICS nations, that's Brazil, Russia, India, China, South Africa, are flexing. Saudi joined. Their talks in 2023 and ex-posts are screaming, BRICS kills the dollar if Saudi flips, maybe hype. But not crazy, because if Saudi oil trades in yuan or gold, the dollar's monopoly crumbles, and that's a chain reaction you can't unsee. Zoom in on Saudi Aramco, it's a $2 trillion beast, per Bloomberg's January 5th update. Pumping crude at $10 a barrel, cheapest anywhere, with 267 billion barrels in reserves. 24% of the world's stash, per Oil and Gas Journal. They're firing up Jafurah this year, adding to 160,000 barrels a day of gas liquids. But here's the twist. They're not just selling crude. They're refining at $10 billion. Wajin Aramco. Deal with China, signed 2024, turns oil into high-value stuff, and Asia's buying, not us. So why stick with dollars when yuan's knocking? Now, America's oil addiction says we import 6.62 million barrels a day in 2024. Canada's king at 4.07 million thanks to Trans Mountain's 890,000 barrel boost last May. Saudi's third, but it's not just barrels, it's the system. U.S. banks hold $1 trillion in Saudi oil wealth, per Treasury data, if that cash bolts to Beijing. Wall Street's toast, flashback to 2008, oil hit $147, crashed to $35, sparked the Great Recession. Now imagine a dollar crash layered on top. 60% of global reserves are dollars. Per the Fed, if demand dips, banks dump it. Hello inflation, jacked up rates, and a recession that'd make '08 look tame. But is this shift legit? Saudi's got $432 billion in reserves, per their central bank. And they're not cutting ties yet. The petrodollar deal expired June 9, 2024, per X chatter, but it's been auto-renewing since 2004, and oil's still priced in dollars. For now, MBS told Fox in 2023, we're chasing opportunities, not loyalty. China's dangling $50 billion by 2030. Per AP News, and Trump's tariffs aren't helping, but America's got shale 13 million barrels a day. Per EIA, and non-OPEC supplies up 1.5 million to 54.6 million in 2025, per Oil and Gas Journal. So we've got a cushion, right? Not so fast. Shale's $50 a barrel versus Saudi's $10. And if prices drop below $70, U.S. rigs stall, leaving us vulnerable. China's demand's flat at 16.6 million barrels a day, per OPEC, with EVs and a property slump. So Saudi's not all in on yuan yet, but the threat's real, and that's the hook. What's MBS's next play? Because if he flips, your wallet feels it. And we're just warming up, folks. Hang tight, because this story's about to explode. So here we are, folks. The tension's thick enough to cut with a knife. Saudi Arabia's dangling a decision that could flip the global economy upside down, and the world's watching, breath held. Because if they shift their oil trade away from the dollar, it's not just a ripple, it's a tsunami. Last time we left off wondering what MBS's next move might be. And now we're diving into the retaliation, the pushback, the chaos that's already starting to unfold. Because this isn't some hypothetical anymore. Nations are striking back, and the stakes couldn't be higher. Let's zoom in on China. First, because they're not just sitting pretty waiting for Saudi Arabia to make up its mind. Oh no. They're swinging hard. Back in November 2023, the People's Bank of China and the Saudi Central Bank inked a currency swap deal. 50 billion yuan. That's $6.93 billion, or 26 billion Saudi riyals, per Reuters. A 3-year lifeline to juice up trade in their own currencies. And Xi Jinping's been pushing since his 2020 to Riyadh visit, saying, let's settle oil and gas in yuan. And while Saudi's still pricing in dollars, China's imports from the kingdom hit 1.8 million barrels a day in 2024. up from 1.7 the year before, per OPEC, and they're not shy about wanting more. January 2025. Aramco's negotiating deeper refinery deals with Chinese firms. Think $10 billion projects turning crude into plastics. And X posts are lighting up, one user snapped. China's locking in Saudi oil while the US sleeps. But it's not just China throwing punches. Russia's in the ring too. They've been trading oil with China and yuan since 2015. Gazprom neft routing a third of its crude sales that way, and post-Ukraine sanctions. They're all in bypassing SWIFT with China's SIPS payment system. Now imagine Saudi joining that club, because if they do, the petro-yuan's not a theory, it's a freight train, and the US dollar's in its path. But let's not kid ourselves, America's not taking this lying down. Trump's back in office as of January 20th, 2025, and he's swinging his own bat. February 10th, he slapped 15% tariffs on imports, aiming to juice US shale and drop oil prices below $70 a barrel. A gut punch to Saudi's $85 break-even, per the IMF. And Saudi's not thrilled Aramco bumped March prices to Asia by 90 cents a barrel. Per Reuters February 5th, a clear not buckling signal. But here's where it gets juicy. Saudi's got leverage 9 million barrels a day, 24% of global reserves. And they're not afraid to flex. X posts are wild, one said. Trump's tariffs just pissed off Riyadh, watch them pivot east. And they might, because China's dangling $50 billion in investments by 2030. Per AP News, while the US plays hardball, now let's talk impact. Because this isn't just a pissing match between big shots, it's hitting you where it hurts. The Peterson Institute crunched the numbers. Trump's tariffs could cost US households $1,000 to $100 a year. And if Saudi shifts oil to yuan, the dollar takes a hit, imports get pricier. Think 20% more for your phone, your car, your groceries. Because 60% of global reserves are in dollars, per the Fed. And if that demand dips, inflation's coming. But Saudi's not stopping there, they're diversifying. Vision 2030's pumping cash into Neom, a $500 billion megacity. And they're eyeing gold. China's pushing a gold-backed yuan. And Saudi's got 323 tons in reserves, per World Gold Council, up to percent from 2024. If they tie oil to gold, not dollars, it's a double whammy. Because gold's at $2,650 an ounce this week, per Bloomberg, and climbing. Meanwhile, the US shale boom's pumping 13 million barrels a day, per IA. But it's fragile, $50 a barrel to extract versus Saudi's $10. If prices crash below $70, rigs shut down, jobs vanish, and we're exposed. So here's your midway wake-up call. Smash that like button if you're feeling these price hikes already, because they're coming. Gas could jump 20 cents a gallon, per Cato Institute. And that's just the start. Let's paint the scene in Riyadh. MBS isn't some puppet, he's a chess player. Vision 2030's his board. And he's got moves. January 2025, Ramco's Jafurah gas project kicks off, adding to 160,000 barrels a day of liquids, per Oil and Gas Journal. And they're not just selling to us. Asia's 60% of their exports. Japan and South Korea alone take 28%, per S&P Global. So why stick with dollars when the East's cashing checks? But the US has cards to $1 trillion in Saudi oil wealth sits in our banks, per Treasury data. If that flees to Beijing, Wall Street's sweating, and Biden's old guard still whispering in Trump's ear. Once Saudi locked in, remember 2023, when they pushed Riyadh to keep oil in dollars during Israel talks, per Geopolitical Economy. But MBS isn't blinking. He told Fox, we're chasing opportunities, not promises. And China's offering plenty, $87.3 billion in trade in 2021, per Reuters, dwarfing US-Saudi $40 billion. So what's the retaliation look like? China's yuan's at 5.3% of SWIFT trade finance, per S&P, inching up from 0.15% in 2022, still miles behind the dollar's 80%, but it's moving. Russia's dumping $300 billion frozen in 2020 to taunt them that tan Saudi's watching. If they shift even 25% of their 1.8 million barrels to China and yuan, that's $45 billion yanked from the dollar yearly at $71.40 a barrel. And BRICS is egging it on Brazil, India, South Africa, all sniffing around non-dollar trade. Ex-posts are screaming, BRICS is the new OPEC, and they're not wrong to wonder, because Gulf states like UAE are testing digital currencies to project Aber with Saudi in 2019, per Energy Intelligence, hinting at a dollar bypass. But here's the shocker, Saudi's not fully jumping yet. The petrodollar deal expired June 9, 2024, per X chatter, but it's been auto-renewing since 2004. And they're still invoicing in dollars. Why? Because the yuan's not liquid capital controls choke it. And their rials pegged to the greenback, per Bloomberg, switching, risks their own currency. So they're teasing, not leaping, but the threat's enough to rattle markets. January 3, 2025. The dollar hit a two-year high, per Reuters, as traders bet on U.S. rates. But if Saudi flips, that bet's off, and here's the kicker: geopolitics trumps economics. She's all-dimensional energy cooperation pitch in 2022, per East Asia Forum. Isn't just trade its power, China's got Africa and Asia in its pocket. And Saudi's oil fits their belt and road like a glove, while Trump's America first risks alienating allies. Ex-users are blunt. U.S. is losing the Middle East to China. And the data backs it. Saudi's trade surplus with China's $20 to $40 billion yearly, up from $5 to $10 billion in 2016, per S&P. So what's the play? Saudi could settle in yuan, but keep pricing in dollars a half step, testing the waters. Or they could go big, tying oil to gold and yuan. And if they do, the U.S. economy's not just bruised, it's bleeding. Because this isn't about oil anymore. It's about who runs the show. And we're not done yet, folks. The real twist is coming. All right, folks, we've been on a wild ride. Saudi Arabia's got the world on edge, flirting with a shift that could gut the U.S. dollar's reign. And the retaliation's heating up. But now it's time to pull the curtain back on something nobody saw coming. Because while Trump's tariffs and China's yuan push have been stealing the spotlight, there's a quiet move brewing in the shadows that could rewrite the game entirely. Let's set the scene. It's February 2025, and whispers are leaking out of Riyadh. Saudi Arabia's not just eyeing China or gold for its oil. They're in talks to lock down a massive new trade route, and it's not with the U.S. Nope. Ex-posts this week are buzzing with chatter, one user dropping. Saudi's pivoting oil to India, and Europe. U.S. is out, and the data's backing it up. India's oil imports from Saudi hit 860,000 barrels a day in 2024, per S&P Global, up 12% from 2023. And Europe's sniffing around to Germany. And France boosted their take to 500,000 barrels combined last year, per Eurostat. Why's this a gut punch? Because the U.S. has been banking on Saudi crude as a steady drip, 300,000 barrels a day, per EIA's January tally. But if that flow diverts east and north, America's left scrambling. And here's the twist. Saudi's not stopping at oil swaps. They're negotiating with India for a rupee-based deal, confirmed by oilprice.com on February 18, 2025. And eyeing Europe for euro trades. This isn't just a dollar dodge, it's a multi-front breakout. And it's happening while Trump's busy flexing shale muscle. Let's crunch the numbers, because this is where it gets real. Saudi's 9 million barrels a day fuel 12% of global supply, per OPEC. And if they redirect even a third, say 3 million barrels to non-dollar zones like India, China, and Europe, that's $78 billion yanked from the dollar's grip yearly, at $71.40 a barrel. Per Bloomberg's spot price this week, the U.S. imports 6.62 million barrels a day total. Canada's for 0.07 million locked in via Trans Mountain. But losing Saudi's slice jacks up costs shales $50 a barrel versus their $10. And if prices dip below $70, U.S. rigs shutter, per Energy Aspects. Gas could spike 20 cents a gallon, per Cato Institute. And that's before inflation kicks in, because 60% of global reserves are dollars, per the Fed, and a demand drop triggers a sell-off. Now picture this. You're at the pump, shelling out $6 a gallon. Your grocery bill's up 15% because shipping's pricier. And Wall Street's tanking $1 trillion in Saudi oil wealth bolts from you. Banks to Mumbai or Frankfurt, per Treasury estimates. That's the reality if this shift locks in. But let's rewind. How'd we miss this? Saudi's been dropping hints. Vision 2030 isn't just NEOM and tech, its markets. MBS told Bloomberg in 2023, we're not dependent on one partner, and he's walking the talk. India's refinery boom. Reliance's Jamnagar plant alone gulps 1.4 million barrels a day needs Saudi crude, and they're paying in rupees for Russian oil already, per Reuters. So why not Saudi? Europe's desperate to rushes to million barrels a day to the EU dried up post-2020 to sanctions, and Saudi's filling the gap. Ex-posts are blunt. Europe's ditching US for Saudi oil. And Aramco's March price hike to Asia proves they're not bluffing. They're diversifying. But here's the shocker. This isn't chaos, it's strategy. Saudi's rial is pegged to the dollar, per their central bank. So a full yuan or gold flip risks their own currency. But rupees and euros, they're safer. BET's liquid, stable. And the IMF says India's GDP growth hit 6.8% in 2024, outpacing China's for 0.6%. So Saudi's not just dodging Trump, they're picking winners. And the US isn't one. Let's zoom out. Trump's America First is backfiring. February 10 tariffs 15% on imports pissed off Riyadh. And his shale push to flood the market below $70 a barrel threatens their $85 break-even, per IMF. Meanwhile, China's flatlining 16.6 million barrels a day demand in 2025, per OPEC, thanks to EVs and a property bust. So Saudi's not all in on yuan, but India and Europe. That's fresh meat, and they're biting. January 2025. Aramco's Jafurah project adds to 160,000 barrels a day, and 60% of their exports already hit Asia. Per S&P Global, now they're carving new lanes. But what's this mean for you? The dollar's been king since 1974. Oil locked it in, and Saudis for $132 billion in reserves. Per their central bank, still lean green. But if they shift 25% of trade, $45 billion to rupees and euros, the dollar dips 5 to 10%. Per Peterson Institute models, imports soar, CPI jumps to percent. Per Fed projections, and your paycheck buys less. Shale can't save us 13 million barrels a day. Sure, but non-OPEC's 50 for 0.6 million in 2025, up 1.5 million, per Oil and Gas Journal. Still leaves us short if Saudi bails, and they might, because MBS isn't loyal, he's pragmatic. Ex-users nailed it. Saudi's playing all sides. US is the loser. And the kicker, this could have been stopped. Biden's 2023 Israel-Saudi talks pushed dollar loyalty, per Geopolitical Economy. But Trump's tariffs torched that bridge. Now Saudi's $40 billion trade with the US pales next to China's $87.3 billion, per Reuters. And India's $50 billion is climbing. So here's the gut check. Trump's betting on American jobs. Tariffs added 140,000 in his first term, per Tax Foundation. But if Saudi flips, we lose more. U.S. steals $14 billion. Nippon deal stalled February 15, 2025. Per AP News needs Saudi aluminum, and auto plants need cheap gas. This shift could cripple them, and the twist deepens. Saudi's not alone. UAE's testing Euro trades. Per Energy Intelligence, and Russia's yuan. Oil sales are a blueprint. BRICS isn't a club, it's a wrecking ball. And the petrodollar's the target. So where's this land? The deal technically expired June 9, 2024. Per X, but it's auto-renewed since 2004. And dollars still rule for now, MBS told Fox. Opportunities drive us, and he's got plenty. China's $50 billion pledge. India's rupee pipeline. Europe's energy panic haul while Trump doubles down. It's a slow bleed, not a snap, but the blood's real. And here's the final punch. If Saudi pulls this off, the US isn't just bruised, it's humbled. The dollar's not invincible, and your cost of living's the proof. So tell me, folks, will America's economy survive this gamble? Or are we watching the Green Max twilight, Hit the comments, because this isn't over. It's just beginning.